Hey everyone, welcome to Breakout Wednesday for the 15th of May 2024. It's currently 4:15 on the West Coast, 6:15 on the East Coast. First of all, remember this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. We're just going to be really short and sharp this week. There's like 5 stocks kind of things, stock/things I want to chat about. All found using my percent scanner. I'm just under the pump at the moment. I've been doing this scan every day, and it's just I miss very few of these things setting up. Okay, I've just been various ones within 5% of the last 50 days. I'm doing it on weekly data, daily data, and it's just finding me everything that's setting up, below highs. And if you're super busy and you find yourself only time to do one scan, try that one. Okay. Now, obviously, here's a chart of the All Laws. It's just really been consolidating, okay, the last week. Nothing really has happened. It's just consolidating. If we let's just look at kind of the NASDAQ, QQQs, NDQ on this occasion, and just doing the same, likewise consolidating. And so therefore, I'm just looking for, obviously stocks basing and trying to find the best bases out there, right? On the ASX, there's one stock. This is a boring aged care real estate play, okay? For those who, watch Breakout Wednesday a lot, I was talking about this guy years ago. I think it was, when was this? Yeah, it was 220, when it was just basing here, and then it had this lovely uptrend, okay? Based again, okay, if we look here, broke out. That's a lot more choppy, isn't it? Kind of failed really, that one, did break out, but, then came back. Then it's been going down for a while, and now basing here, okay? I would love that to base a lot longer. It's a sort of stock that loves to grind sideways for months on end. So let's see if it can do that. Just on the watch list, it's illiquid. It has these large spreads during the day. Using intraday stops in the market is not going to work. You have to have mental stops for stuff like this, which is dangerous, and therefore, probably position size and should be adjusted down accordingly, right? So that's one in the ASX. A Davis box that's come up in multiple scans on the NYSE is KGS. This is on the New York Stock Exchange, okay? Now, obviously, this is an energy stock, as you can see up here. It's got blue sky above it. It's, I'm pretty sure it IPO back here, and it's pretty new stock. And obviously, look at this uptrend here. I mean, holy shit, went from $18 straight to $28. It's had a pause and never, bounced off its 50-day exponential moving average a bunch of times, and now it's just basing here, blue sky above it. So, that's what sort of shit I look for. Blue sky above it, basing, ascending triangle kind of thing forming there. That is just, if I can just take setups just like that. I'm going to lose some of them. You're always going to lose some of them, but over 50% of them are going to be runaway winners. As long as I can let those winners run and cut the losers ASAP, then it's going to be good results, good times. All right. Now I want to quickly chat about kind of the biggest market of them all right now, the chip market, and what's happening in it. And earnings are coming out soon for some of these companies, and you need to check that out and make an informed decision based on the timing of the earnings and everything. All right. AVGO, this is stock, remember I was talking about it, and this huge base back here. That was really kind of the start of a massive uptrend that had pullbacks along the way, as they always do. Okay, it's broken out again. This is not as clean as this one back here, but doesn't mean it's not going to be, the start of another up leg. You can, there's all sorts of patterns in here. I'm not going to go through them, but it's just literally just a consolidation pattern, to cut a long story short. Let's just look at some of the others, like NVIDIA, right? Base in here, okay, really tight little right-hand side forming on it, all right? And obviously it's the best known chip company in the world. It's not the only one though, right? But it's definitely the best known and growing so quickly. Earnings coming out soon. TSM, another one, and this one's I kind of already left the station a little bit, right? So there's a lot of relative strength still around in this sector, and it's just, for those who think, these expensive stocks can't move. I mean, remember this was at $500 not long ago, and it's nearly doubled since then. All right, and they're liquid, and you can get in and out very, very, very quickly. And for me, they work. I have a lot more success in these big, expensive stocks, just like Davis did back in the 60s. He wasn't trading penny dreadfuls, right? He was trading expensive stocks with low brokerage fees. The brokerage fees on these US trades are crazy low, right? Talking like a couple bucks, to buy, quite a significant amount of them. It's very, very low. You get in and out. If something doesn't feel right the next day, just get the hell out. And you haven't taken a $200-300 buck clip on brokerage, right? It's just such a smarter way to do it. LLY, shit, that's the wrong one. Here, still setting up. I talked about this a lot last week. Not going to crap on about it again, but basing, printing money, supply demand is nuts, and so we'll see if that breaks out. It's just, that's what the chip stocks and stuff like LLY have in common, right? Just the fundamentals behind them are really, really good, okay? And there's so many ways to look at fundamentals, I realize, and different opinions, and that's why, it's commonly called fundamentals. But when when synced with technicals, it does get a lot more black and white, right? Like if I think that LLY has the best fundamentals in the universe, but the stock's trending down, I'd give zero shits about it, okay? It's only when they're trending up and giving me lovely bases do I give a flying S about the fundamentals, right? And before I just piss off and get on with life for tonight, I've been talking a lot about LLY, IGO, ILU, and they're in dangerous positions, okay? Like, and I talked about IGO, how it's like, usually I will never touch these until they're above their 200-day exponential moving averages. And when they're down below these, I've said it a million times, like they are prone to failed breakouts so much more than when that base is more mature and has gone sideways for a very long time, all right? And therefore, playing around down here needs much smaller positions than it would if, say, I had a lovely base in a mature uptrend, kind of like, I don't know, let's just flick to KGS again, all right? That to me is a different probability setup than IGO, right? And that's why IGO has like this kind of inverted awesome risk reward, because you're kind of bottom picking, right? And when you bottom pick, you're gonna get burnt, maybe as I was saying last week, 3-4 times in a row until you get it right, and you need to be ready for that. And so, trading shit when it's down below these 200 days, really hard. It takes patience. You've got to be tough and resilient, all that crap, okay? But just quickly getting back to LYC, okay, it's now popped its head above this massive downsloping resistance line. It's popped its head above this massive kind of resistance line. I'm not saying it's a buy this second. I'm just saying that, there is a lot of kind of writing on the wall that maybe this precious metals space is starting to turn around, but it's going to be volatile. I mean, they always are. And I don't know if it's smart for me to treat them as trades with tight stop losses, because I can guarantee I'm going to get stopped out. It would be more looking at it from, because of the stage of their life cycle right now, looking at it from a kind of, as you would have a venture capital kind of investment, or an angel investment sort of thing, where it's like, shit, I might lose like the whole lot or 50%, and you have wide stops, or in VC you have zero stops, right? You just lose everything if it fails. And you're not going to lose everything if this kind of goes down a lot. You can always have a stop, obviously, but my point is it's going to be as volatile as all hell. It's going to shake nearly everyone out. And if you don't want to get shaken out, shit, you're going to need a wide stop. Otherwise, just simply do not touch it. I'm going to piss off. That's it. Short, sharp, awesome setups in there. Let's see what happens over the next week. Take care. Bye.